Welcome to HBI 2026. I'm Rakshitha. I'm a journalist with Healthcare Business International. We have with us here Charles Nantois, who is the Managing Director at Columna Capital. Welcome, Charles.
Thank you very much.
Many thanks for being with us today. Charles, I have 3 questions for you today. What makes the mid-market healthcare services segment attractive for private equity like yourself?
So I think it's various things. First of all, it's a sector that still remains quite fragmented. If we look across Europe, in most verticals within healthcare services, you still have a lot of consolidation ahead of us. And we've been a player in that. We've invested in various verticals within healthcare services. And even though we've grown quite a bit and we've acquired a lot of independent units, there is still a lot to do. So it's a sector that will continue to consolidate, and that's an attractive proposition for a private equity player. I think the other aspect is that it's usually quite resilient sector. So as an investor, it's a good proposition to invest in resilient sectors and through the cycle. So I think these are the main attractions.
So healthcare services, do you believe, so many people say healthcare services is like a safe haven for investors. Do you believe that?
Yeah, I think so. I think if you look at what has gone maybe not so well for some of the investors is never really related to the fundamentals of the business or the fundamentals of a sector. It's really about transaction structures or leverage that has been used too aggressively that in the end comes back to bite them. I think the sectors themselves, they are perfectly fine and the fundamentals are strong. But is it a good fit for a high return, short time frame kind of mindset? I'm not sure. I think it's about investing more in the long term. And maybe the target returns in that sector should not be the highest across all the sectors.
Okay. In 2026, looking ahead, what subsectors are you most interested in? What subsectors are you looking at within healthcare?
So within healthcare, we look at a broad set of different verticals. So you have healthcare services, it's a big one. And that's, I think, if you look at our portfolio, where we have been the most active. But we've also been looking at medtech. So we have an investment in our portfolio. In France, it's a medtech business. We are also looking at CROs, so pharma services, and CDMOs, so more manufacturing business. So we really look across most healthcare verticals. I think what really defines our strategy is that we are focusing on businesses that are mature but still relatively small. So we are focusing on businesses that are around 7 to 12 million of EBITDA when we come in, and we really look to accelerate their growth organically and also through acquisitions. And what I think differentiates our approach is that we start at a relatively low end of the spectrum, so lower mid-market really, but we have a pan-European approach, and so we are able to do cross-border M&A, and we can take a French player or an Italian player or a Spanish player and transform it into a pan-European player.
Okay. Looking at sectors like dental care and nursing home segment, what opportunities do you see there?
So I think, as I said initially, I think the consolidation is still ongoing. I think there is a lot of room to continue to grow. I think you need to pick the right operator to capture really the growth opportunities. You need to take your time and really remain quite selective on the assets that you're buying. And you need to really focus on integrating these targets that you're buying and really creating a fully integrated platform and fully integrated group. I think that in the past we've seen some investors go and be very aggressive on M&A very quickly and execute more like aggregation platforms rather than really integrated groups. And I think that's what has been the challenge in some of those sectors. If you do the things a bit more slowly and if you take your time to integrate and really create a group, then that's when you realize the synergies. That's when you have a lot more control over the business. And that's where you also mitigate a lot of the risks that we've seen, like for example, the reputational risk, all the various scandals we've seen in some of these verticals. If you are integrated and you're really managing and controlling the businesses, then you will likely be able to manage that as well.
So you mentioned cross-border deals. Do you see that happening a lot in 2026? And if, what do you have any advice on these cross-border deals going for investors when they look at cross-border deals?
Yeah, I think that it's quite a significant undertaking to go abroad. So sometimes we meet entrepreneurs that tell you, I want to go international, but actually it's more of an aspiration rather than really a project that makes financial sense. So you need to be careful about that, because sometimes you can do a lot in your own country, and before going international, maybe there is a lot to be done locally, which is a lot easier. So the temptation is always there to say, I've reached that size, now I want to go abroad, I want to be a global player. I think you need to be a bit careful about that. I also think that in order to do it successfully, you need to have the right partner, and this is also our value proposition.
Partner?
You need to have, I think, the right financial investor that can support you. And by the right one, I mean somebody that can actually understand the local markets and help you to navigate those, having the right local network of advisors, and having somebody that can help you execute a cross-border transaction. I think it's quite hard to do it on your own. If you have never done it before, if you have a sponsor or a financial investor that is local or national, that doesn't have experience into cross-border M&A, it can be quite challenging.
Yeah, great. Many thanks for making the time and being with us today, Charles.
Thank you very much for having me.
Thank you.